I assume the IRS is going to have some tools to figure out what you owe. I'm sure they're engaging Palantir to like figure this stuff out on a massive scale. So like, I'm just going to assume that like, whether it's in 2 years or 5 years or 7 years, that information will be able to be figured out. You know, in terms of privacy, I don't really want everyone to know how much I have, which is why it's spread across wallets. And then the IRS, I don't really care about. I'm not, trying to evade anything.
Welcome to episode 42 of the Alfalfa podcast, bringing the energy for my man Tinfoil here. We're talking about your financial privacy. Obviously, some big shit went down over the last few days with Tornado Cash, and the real headline we've got for you today is your financial privacy is under attack. And we're going to solve that. We're going to talk about that. It's funny because a few days ago, right before this event that you'll kind of share what happened, Stephen. But a few days ago, I literally texted you and I was trying to understand the mechanics of Tornado Cash because I haven't used it before. I promise, Mr. Government. And I definitely haven't used it now. But I wanted to understand from a privacy perspective, really the mechanics of how this all works. And we were texting about it, comparing what would it look like to move your crypto to an exchange and then send it back to yourself, versus using a mixer like Tornado Cash. And we were kind of texting back and forth about this. And, we said, hey, let's do a call. Let's go deeper on this. But here we are now, a few days later, and this has been sanctioned by the government. And something that I personally am very passionate about is privacy. And maybe I'll be proven wrong that that's even important at all in crypto after this episode, but I care about it a lot, personally. And, Nick just reminded me we're kicking off with the Alfalfa Round. So before we get way too far ahead, let's kick off with that, and then we'll come back to the stories.
All right, we'll call that a teaser.
That was a huge
great teaser, though.
No, now how do I even switch gear now?
You need a new segue, though. Got to make up a new segue on the fly.
Yes, here we go. All right, give me the money.
All right, so last week on, I believe it was Friday, I started buying some SPY puts and bought some more on Monday. To hedge the portfolio, I guess public equities portfolio. Told myself I would start it around 4,200, so I followed it. I was a little nervous going into the CPI print, but in the case, that's the moves I made for the week.
Nice. Well, we're pumping, so those puts aren't looking too good. But
nope.
But like you said,
but the big bag's up, so
right, it's
net long.
Yeah. And I think we at the table, especially currently, looking at Stephen, we have a long bias, and like most investors do. Like you mostly buy stocks or buy assets. You don't short sell them. So I think buying hedges can be a smart play. And
if my hedges go to zero, that means things are good.
Right.
Right.
Then your money's up
right.
Net. So I think this macro thing is very tough to read. I'm still of the opinion that like assets are going to crash again. What path it takes to get there, who knows? Something that I thought of recently is it's a quote by Ben Bernanke, former Fed chair, and he said something to the tune of like, we try to predict the weather, and we can't even get that right. We try to predict the weather 10 days out, and we can't even get that right, and that's bound by the laws of physics. So far be it from people to try to predict price when that like has the element of human behavior and psychology in it that like muddles up everything. So part of me just thinks like, what is even the point? And the point for someone like Nick is like, well, you're trying to protect, you're trying to hedge downside risk. So, I have hedges. Those are probably lower today than they were before, but we're all happy that everything's pumping. So that's good. I think, in our Discord, I shared that I bought some calls, 1,500 strike calls in the near term and 2,000 strike calls going out to next June. And I'm trying to maneuver how to play these things. And I said at the time, I was like, well, I'll probably look to close those out when the merge happens. We're not at the merge yet, but we're pumping. And I think the way I haven't done anything there, but I think the way I'm going to play that is instead of selling those calls at market, I'm going to sell calls against the calls that I hold, like sell out of the money. Like I'll sell 4,000 strike against my calls and probably actually use proceeds to buy puts just in case.
Interesting.
Yeah, just to hedge against the downside risk like you just did.
Yeah, that's what I did coming into the print, and didn't end up being necessary. Obviously, it was a good print. I was also hedged short, probably like 20 or 30% going into last week. I actually got stopped out of it. I had a pretty tight stop, like around like 17 or so, and I decided to not put anything back on. I went into the print completely naked today, so that was that went well, fortunately. Trying to wrap my head around this idea of I'm fighting a couple things here. Like I think I mean I've been saying it a lot lately. I think the last inflation print was the peak. I do think that returns in the stock market once you hit peak inflation tend to be really, really strong over the next 6 to 12 months, assuming you know that was peak inflation. But I'm trying to wrestle that with the
net
QT,
liquidity.
the net liquidity,
Yep.
the worldwide net liquidity. This is something I've become like really interested in and been diving more deeply into. The last Hidden Forces pod was really good with cross border capital. I think their name is. They actually own liquidity.com, I believe, which is a hell of a domain name. They bought it in like the 90s or something. So trying to wrestle, like part of me is like we've hit the peak. I think we're going up from here, but then part of me is also like, okay, the liquidity thing is real. Also, I think you're still a little blind if you completely ignore high inflation, even if it is trending slightly downward. And there is this open question of like, how down is down enough for us to like truly have the Fed take the foot off the brakes. That and trying to wrestle with the implications of a yield curve that I guess today steepened a little bit, but is still quite inverted.
The 2s and the 10s or the
Oh, it's almost like
like everything.
It's almost like the 10s and the 30 day is going to be inverted pretty soon.
Yeah, it's quite steep. I think today there was a bit of a flattener with the print, or steepener. I don't know. But yeah, so that's everything I'm thinking about, and I plan on just being super aggressively positioned at like a really difficult level where I wanted to throw up because I just thought it would be easier to stomach getting in there, and I didn't know when I would get long, like if we pumped from there. So I'm planning on sort of aggressively taking some profits going into the merge, I think, and then kind of reevaluating from there.
I just want to throw one more thing out before we get to Armand's Alfalfa.
Mm-hmm.
Like something that's happening in the back of my mind is it's something we talked about a month ago when Druckenmiller went on that interview, and he was saying like, I closed out all my shorts. He did that right about the bottom, and he's like, but I will look to get back into my shorts if the market presents that opportunity. And I feel like the opportunity is knocking on his door. So is that something that you're considering?
I mean, I'm considering going into cash again at some point. I think there is I've been saying this for a bit, but I think there's a very high probability of I think Paulo Macro on Twitter calls it a Max Stupid event, like a echo bubble, whatever you want to call it, like where you have this like insane run up that is truly so great that everybody thinks like it can't possibly be anything other than a new bull market. And then, I don't think people have been quite put to the test yet. I wouldn't shock me if we traded down from here. It wouldn't, but like I have, the possibility budgeted in that we go to new all-time highs on the S&P and go to 50,000 Bitcoin. Like those are things I'm aware of as a potential scenario, even if we do still make new lows at some point in the next year. So
Would love to see it.
yeah, it's trying to process all of that and just kind of take it month by month, really, and just reevaluate strong convictions, loosely held type
Smart.
thing.
Yep.
Cool. I love that. I've been mostly thinking about the merge, doing a lot of homework. Well, not enough. I want to do a lot more. And, I'm sticking on Lido right now, but I've been looking at Rocket Pool, and I've been looking at something that was thrown out in our Discord, All Nodes, which really takes a lot of the heavy lifting out of that process. And honestly, just preparing and learning for that side of things. I love hearing you guys talk about this stuff because I just find it as like the learning for the sake of learning. Mm-hmm. That's about all it does for me because I have not taken the time to think in the time cycles that you guys do. For me, it's like 3 months, 6 months. That's the level that my moves are at. So in preparation for the merge, I'm just thinking about how I want to play that. Not necessarily to the degree that Stephen is talking about. I don't think I would sell, pumping into the merge necessarily. I'm just looking to position myself properly for the next 5 to 7 years when it comes to crypto. But there are buckets that are getting fuller than I would like at times. And so I'll do some reallocation here and there at times. But no, I love all the macro stuff. And I think in particular, what is that? Oh, that's our time. I think the most fascinating part of all of this is like people just bringing their minds together to try to figure out where the world is going and take advantage of that. And that is like, everyone is trying to figure out the science to that. And that's the most fascinating part about all of this is like all these knobs and levers and trying to figure out what is actually in relation to the other. And it's very new to a lot of us, but in particular for me. So I just find it all very fascinating.
Yeah, I mean, from this conversation, I think I just came to my mind that I've had some level of improvement when it comes to investing. Like I think I used to invest for like one outcome that I thought was going to happen, and now I feel better about prepared for multiple outcomes because they're all probabilistic, and I feel better positioned. Even though some part of the portfolio loses, some part it wins, but in the end, it should work out well. And I don't feel uncomfortable no matter which way the market goes. So that I think that's been an improvement just from these conversations.
Yeah, you just remind me of something that I don't think we talked about in the money episode, in the get rich quick episode. But like my game plan to getting rich, literally my entire life was Vanguard index funds with a tiny amount of crypto. And that has been the path to wealth, the guaranteed lowest sort of like action, lowest volatility, highest performance, set it and forget it path to wealth for the last like forever, for like multiple generations. And this is the first generation in which that is no longer really on the table anymore. And so what this does, I think it could be, but you basically are sitting on the sidelines in some very important matters.
Yeah, I think of it more of as like a get rich with certainty rather than a get rich quick.
Yeah, I question the path as a whole, the stock market as a whole, the future of like.
Oh well, I think businesses will continue to make money.
Sure. I mean, I think it depends on the business, though, right? I would segment the stocks into like 3 buckets. I think there are buckets that are exposed to like energy and mining and commodities. There are stocks that are, I would put in like the super high growth, like really long duration stuff, and then the stuff like that's kind of everything else. I kind of feel like that everything else bucket is going to suck over the next decade. Can make a really good argument for like high growth, super long duration stuff to do really well. Although I might argue you may as well buy Bitcoin or Ethereum to fill that particular bucket. And then the other bucket that I think will do really, really well would be the energy.
That's the purpose of the index stuff, right? You don't have to think about that.
Yeah, but that basically guarantees you get like half the return, right?
But,
like if you could cut out.
It is a get rich with certainty because you get exposure to all of it and you don't have to really do anything. You contribute every 2 weeks.
I just kind of feel like your return will be like 3% though, It won't be 9, and then that's a big thing. And you're not getting rich off 3, right? People are only getting rich off 3 because they're making tons of money and they're saving a ton of it. And a lot of that compounding is coming from increasing the principal, but like 3% compounded for 20 years is
it's not it's below the historical rate as well.
It's not boat money.
Well, I think the biggest thing is like when crypto exists, it's hard to just sit there and do absolutely nothing with index funds.
I'll buy AT&T stock for its 3%.
I mean, dividend. It's just
I think it's 6%.
It feels
really? That's pretty good.
It feels obsolete, and then
he's got a higher dividend.
You step into the world of crypto, and you have to worry about privacy for the first time ever. So let's talk about
he's back. Look at him.
And things that you never thought that you would have to care about. This beautiful, open, decentralized, permissionless world, and then all of a sudden it's like, holy shit! How do I guarantee any level of privacy? And we're under attack. So tell us how this all works, Stephen.
Oh, we're all screwed now. Yeah, I mean, I don't know what to do now.
Do you think it's the end of any sort of privacy in our future?
Can I ask
And we
a
just start with the
simpleton?
hot?
Can I ask
Yeah.
a simpleton question?
Mm-hmm.
I've never used Tornado Cash because I've always thought that Tornado Cash like would put a bullseye on your back because it just seemed like low hanging fruit for the powers that be.
Yep.
My question about it, and this is like the simpleton question, is like, are they going to go back in time and look at that, or is this like a starting now? Like anyone who uses
No,
it, like,
they're not going to sanction people who used it in the past. But
Okay.
like if you use it now, you are playing with fire. Yeah.
okay.
Like serious fire.
Like serious fire, like jail time.
Well, can you give a
fire.
rundown very quick on like what happened to the OFAC, and can you just like give a quick summary about what transpired?
Yeah. So basically, the U.S. Treasury decided, hey, we're gonna blacklist a bunch of these addresses and basically this entire contract, the Tornado Cash contract.
But the addresses were associated to the smart contract, not to individuals. Am I right?
No, some of them were definitely just individual addresses. Like I think one of them was related to, wasn't there like an address related to Gitcoin or something?
Yeah.
Or, yeah.
And there was like a ENS, I don't know. Yeah, I think Gitcoin was in there. There were a handful.
Yeah, I mean, Blinken came out with some tweet, and he was like, "This was created by a North Korean hacker." You got dunked on immediately because
Yeah.
it wasn't. Like, a lot of people were like, "I know the devs. I've spoken to them. They're quite not North Korean." He deleted that, took it down, put up some other tweet. But like, the bottom line is like, this is like the sort of designation that's given to terrorists, terrorist organizations, nations that support terrorism. Like, you are not allowed to do business. It's like how in the U.S. like you're not allowed to do business with like Iran or Cuba, these entities, without like express permission from the government, or like very bad things happen to you. Like, this is like very, very top tier, you go to jail kind of financial crimes type stuff. It's a really, really severe designation. It's the first time I'm aware that the government has done this to any sort of protocol.
And the reason there was a big uptick this year, right, in overall volume, but volume that they associate toward laundering.
Yeah, I mean, there was that one-time hack that was it the Lazarus Group. They took down like 600 million or something
Out of the Ronin,
Yeah,
Axie Infinity.
But I mean specifically for,
Tornado.
yeah. I mean, I don't know the exact numbers of Tornado. I know somebody did an analysis, said like 5 or 10% of the funds are traceable to hacks.
I
or
have
something
one.
Like that.
I have one in front of me.
Yeah, give me
This is from Chainalysis. So obviously, Chainalysis gets money from the government for providing services. So you may think this could be biased, but essentially, this is a pie chart that looks at cryptocurrency received by Tornado Cash by source, and they put about 50% of it DeFi, let's call it 20% from central exchanges. But if you kind of round it up, it's like 18 other 20% that are either from stolen funds or sanctioned groups / individuals. So, I take that back. It's close to 30%.
That's high.
30% is what Chainalysis says. But what you're saying is like 70% is not. It's using it for the tool.
I mean, 30% is bad if it's 30. I feel like it's not 30 in reality, but
okay. But like the 70% of users, the majority of users are probably using it for privacy purposes, not for money laundering.
Well, you're talking about percentage of users. I think what Chainalysis is looking at is percentage of funds, dollar amounts. So that's why it may sound, more than you expected, because you have a $400 million hack.
Huge amounts.
Run $500 million there a couple times.
Right, and I think what is unique about this sanctioning is that it's essentially a tool. It's not a person, a country, a corporation. It's a tool, and that's also what makes it unique. It's also what makes it really, really silly, because like I think they were particularly looking at the Lazarus Group, which is associated with North Korean hackers, and this is a tool they used. It wasn't, Tornado Cash is not like a corporation or an entity, but those North Korean hackers also used a computer and a browser and an internet connection. Like they use several tools to go about this hack. And we've talked about how certain types of technology can be used for good and evil. Gasoline can power your car. It can also, power a tank. There's like unlimited number of like analogies that you can make this, like Apple AirTags, right? They could be used to find your lost keys, or they could be used for human trafficking. And so, I kind of put this situation in that bucket of like a technology that can be used for good or evil. It's just really unique and also silly that they sanctioned a tool, which is essentially like some open source code. That's quite decentralized.
They sanctioned code. They sanctioned it's a weird thing. Like
Right.
as you said, like as far as I know, this is the first time they've ever sanctioned a non-person entity. Like almost doesn't even make sense. It doesn't. It's like they try to apply this like old thing that they do to this new paradigm where the rules of engagement don't quite fit, and that sort of resulted in this kind of hilarious like trolling that's been going on where some guy is just sending celebs dust amounts of or not even dust. I mean, he's sending
Right.
like dozens, if not like over 100 celebs now, like 0.1 ETH from Tornado Cash to kind of make a point. It's kind of like a chaotic good type thing going on there.
Can I ask another simpleton question? It's like, so they sanctioned Tornado Cash. They didn't sanction mixing services, right? Like, so like anyone could spin up another mixing service where you could get the same outcome as so long as it's not Tornado Cash.
Yeah, I don't
Am I
think
right
it's
about
as
that?
easy as copy pasting the code over, but yeah, essentially, I think you could. I mean, I think you'd pretty be aware of what the eventual fate could be of that project, but it'd be nice if there was
But
20 of them.
I think there's like been torrent services that have been fighting this battle for a long time. Like Pirate
Good
Bay has
analogy.
like spun up different websites over and over again.
Yeah,
Okay,
it's
but
an inevitable
what's
thing.
different though is like a mixer and the way it works like relies on a critical mass of people to be using it.
Right.
So does
like-
file share, but I get your point. Like specifically in a mixer, you need liquidity. Yeah.
You need enough people putting funds in and out so that a very basic like 5-year-old chain analysis thing can't be like, oh, that's
You need
Nick Urbani's
obfuscation. Like if it's just the four of us and you're like,
Yeah, yeah.
nice job,
yeah.
guys.
Like if one person is using Tornado Cash every 6 days, it's like you're not hiding from anybody, right? Like the mixer isn't like some magic thing that vanishes the money. It works on the principle of tons of people all pooling in their funds and then kind of like withdrawing it at various times to different addresses. And you're supposed to use like VPNs and stuff. And there's a lot of ways to get caught using Tornado Cash. It's not in and of itself foolproof. In the
Right.
This
slightest.
is what I wanted to discuss with Steven. And it's not from a get caught perspective, but more so like wanted to learn the actual how the privacy mechanics really do work, because it sounds like it's not as simple as like plug and play for most people.
It's not. It's funny because when we were talking about using Tornado Cash, I was like, I highly recommend like funding the Tornado Cash from some sort of like. You were confused at this, right? You're like, well, how do I fund Tornado Cash from a wallet? Like if I need to use Tornado Cash to get anonymity, and all I was saying is like, don't take your default like .eth account and then just put all the money in it from like. Give yourself like some plausible deniability or space in the event that like something happens in the future. Like, I don't know, send it to your Coinbase and then like send it to KuCoin or something, and then withdraw from KuCoin to a totally new wallet, and then send it from there to another wallet, and then
you were
put it in
saying
Tornado Cash.
no, to make sure I understand, you were saying you were comparing Tornado Cash to just sending the money to a centralized exchange.
No. We're talking about a different conversation. You were talking about if I want to use Tornado Cash, and I was like, yes, but you can't just use it, right? You have to
Right.
follow these other best practices. And I was like, a good example of what not to do when using Tornado Cash is to take your publicly doxed ETH and just directly send a bunch of funds from it, because God forbid in the future this thing gets
I
blacklisted.
think everyone knows not to do that. That's pretty straightforward.
Did you?
Yeah, I don't think it makes sense when
So the
you
path would have
text
gone
about something like that.
Armanasati.eth back to Coinbase, Coinbase to
literally
KuCoin, KuCoin
would
to
have
a
never
brand new wallet on the ETH blockchain to Tornado Cash, and then
Right.
that would be obfuscated enough.
I don't know
Probably.
if you quite remember, but you were comparing sending the mechanics of sending to an exchange versus you were like
Oh
effectively.
yeah. That was
you were
a
like they're
different- that was a
effectively
different-
they're the same.
That was a
thing.
different conversation. That was a conversation on the benefits of using an exchange as a mixer versus using an actual mixer.
Yeah.
And then I was talking to you
So
about
I want to know how you
best
guys feel
practices
about
if you do use
all
the
of
mix.
this. Like, how do you guys really feel about the fact that this
Well,
happened and the future of this?
I immediately thought about the enforcement part. Like, how are they going to enforce it? Because it does impact like how this changes how you operate potentially. They're gonna enforce it through the businesses and entities that engage with it. So obviously, the biggest move that happened right after this was Circle, the company that manages the USDC stablecoin, also said we're going to blacklist these same addresses because they don't want to, reach the fate that Stephen talked about when you kind of violate sanctions. And so that comes into play. Well, if USDC can blacklist addresses, do you change the way your stable coins work? But I think, they'll continue to do that. I guess enforced via other entities and most likely businesses, maybe not so much individuals, because that's might be tougher to do and not have as much impact as they want. So yeah, I mean, I think the first one is maybe discuss, do we use different stable coins now? Like USDC is my preferred way.
Yeah,
but
I mean, it's a separate. I think it's a good discussion, like the alpha discussion. I don't know. Like, do you want to talk more about the implications?
I just want to know if you guys even care about privacy.
Do we care about privacy?
So let me talk to that point specifically. I think we all care about privacy. And first of all, like, none of us want to know how much money anyone has. Like, nobody, like, none of us give a fuck about that. I actually would prefer not to know. So like in that simple framework, like, as easy as me transferring from cryptocfa.eth or you transfer from amanasadi.eth to another wallet is probably removed enough to just avoid that problem. And maybe you can go like 2 steps. Like if you just want to avoid people knowing how much money you have, I think that's probably sufficient, because like nobody knows who this wallet address is assigned to that you sent 50 ETH over to.
Yeah, I think I'm kind of in that camp. Like, I assume the IRS is going to have some tools to, figure out what you owe eventually. I'm sure they're engaging Palantir to figure this stuff out on a massive scale. So like, I'm just going to assume that like, whether it's in 2 years or 5 years or 7 years, like that information will be able to be figured out. So, in terms of privacy, I think it's just, I don't really want everyone to know how much I have, which is why it's spread across wallets. But
this is what I'm saying.
And then IRS, I don't really care about. I'm not, trying to evade anything. And then, I don't think I'm not doing anything bad. So
I think the only person or entity that should know, should be the IRS. And I personally want that to be a closed loop, where it's truly private between myself and the government, and that's it. But to have all this stuff, to have Chainalysis out there, and to have future companies out there that are going to be just perhaps making this accessible.
Well, let me throw a curveball in here. Let's
annoying.
say in 3 or 4 years they're like, no DeFi. I don't know how they would do that, but let's just say it's the point of view of the government that we don't want you to use these DeFi protocols and services. Then at that point you might be like, well, fuck that. Like, I want to use these. Like, they're useful to me in my financial freedom. In that case, doing some good OPSEC leading up to that way before, would be useful if that, does happen in the future. That's the only scenario I could think of. It's where you kind of need to be off the grid because you're going to intentionally work outside the system, if that ever does come true.
Yeah, I kind of disagree with what Armand is saying. I don't want the government I don't want to be private between me and the government. I want to be private between me and nobody else. I mean, I have one
but they
wallet
have to
that's
know, don't they?
No.
Sure they do.
The government has to know my P&L. It doesn't have to have a full blockchain-based record of every transaction that I ever take financially. I don't. I think
that's what I'm saying too. Yeah.
Well, so when you say it's between me and the government and nobody else, you mean it's between what you tell the government, not that you and the government share the same data set.
It's fine.
Yeah.
Just keep going.
Okay. Yeah. I'm do everything in my power to not be doxxed at all. I have one wallet that's kind of doxxed, and every other wallet I try to keep as off the grid as possible. And that's not to say I don't pay taxes on those wallets. It's just to say I don't want anybody knowing they exist. I don't want anybody tracking them. I don't see any good that can come of it.
Yeah, and to be clear, I don't think they should know or deserve to know. They don't know how much cash I have in my house or my safe deposit box. They don't need to know that, nor do I want them having more tools for surveillance just for the sake of having that surveillance for some time in the future. I don't want them to do that. I just think, the IRS will eventually try to figure stuff out on who's evading taxes and whatnot, and that'll eventually happen. But I by no means want them or think they deserve to know by any means what your personal financial,
they just need to
where
know,
your cash is and how much do you owe us.
Yeah, that's it. But that's the most important. That's the only person I think that should know that.
Right, by you telling them.
Yeah,
right?
by you telling them.
Yeah.
Yeah.
Okay. I mean, that makes more sense. I'm glad that's your position.
Don't worry, I don't want to give it all up.
Yeah. No, I'm
more libertarian than you.
Your cash point is a good one, right? Because for the majority of human history, it was just a given that your finances are sort of private, and we're slowly inching into this world where that's not the case, and a lot of people think that surveillance is almost becoming the default, that it's a right for the government to know these things. And I think everybody in crypto needs to pound the table and just say like, no, like we're not going to let this happen. And I think that stuff like the tornado guy's been doing lately, where he's just absolutely sowing seeds of chaos everywhere. If everybody in the world just does that and everybody becomes unruly, and like technology is going to keep moving faster than they can enforce stuff, they're eventually going to probably go into some sort of draconian, like force-based, full like authoritarian type measures if they want to keep pursuing it, because they can't just ban smart contracts and think that that's going to work really.
I'm sure a good enterprising lawyer will pick up this case at some point.
Yeah, I mean, I'm curious, like if they decide this is a kind of a free speech thing, like can the government ban you from interacting with code on the internet? Like I don't know. These are all interesting questions. I mean, we're gonna have a future of a bunch of these interesting questions across various areas of technology, right? So this
torrent sites, Napster, of course they can.
Those are different because they are controlled by central entities. They have like somebody that is sort of like hosting them or something. I think blockchain is different because this is just purely something that is out there in the ether. Like nobody needs to host the website. There's no company that can shut it down. Like when government goes after people who are doing LimeWire and so, like there's a computer and they'd be like, you shut this down. You have this server and it is serving illegal information. And it's a little different for me if it is like an immutable smart contract that cannot be taken down and isn't hosted by anybody and is just out there. Like it's not something we've dealt with before.
So what about the irony between the idea that like cryptography is intended to be secretive, but then the blockchain inherently is public? Like there's an irony there where it's like, like on the one hand, you would think this would be like the best vehicle for nefarious actors. But on the other hand, it's like the nefarious actors are fully transparent and like it's so easy to capture because it's like this is a transparent ledger where we like, there is an inherent dichotomy there.
Yeah. But I think that's the current state of the technology. And I would think that people, and they've said on previous podcasts, like people in intelligence groups know that like if a country uses Bitcoin or Ethereum or anything else to move money around, it's very easy for them to track it. It's easier than if it was cash or maybe even the traditional banking system.
Which, did you see that Iran announcement today?
They will start accepting.
The Iranian government announced that they did a $10 million Bitcoin-based trade on imports.
Yep.
And I was like, oh boy, there's a shot across the bow.
Right.
Wait, hold on. I did not hear that.
Yeah, I saw it this morning.
Do you know what they traded though? Like what the good or service was?
I don't think they said what the imports were. They just announced that they used Bitcoin.
What is?
Well, it's probably not oil because they're exporting.
Yeah.
So I don't think it would be something like that because that would be a bigger headline for sure if it was oil. But yeah.
Interesting. Okay.
Yeah, and I'm just like, oh man, where's this going? Where's this going? I mean, I'm curious your thoughts on it. But when I look at the crypto landscape, even just Ethereum, right? The whole ecosystem is basically settled in dollars. And unless you just want to live in crypto forever on the blockchain, eventually you have to pull that money into a centralized exchange and trade it for fiat, right? And then once you do that, there aren't that many choke points in the world that the U.S. government does not have their hands in, right? So it doesn't seem to me like it would be that difficult for them to enact a whole bunch of draconian policies to just basically prohibit every major exchange in the world from processing these transactions, right? If they're X number of hops from whatever, like they'll force them to do chainalysis and it's going to be a mess. And I'm sure it'll cause, like, if we go down that route, there's going to be a huge incentive to have all of these kind of black market exchanges pop up that, do shady offshore banking, but give you like an exit route. And it's going to be a complete shit show if we go down that route.
Yeah. To go back to Eric's point, I do think like the technology will develop where you could possibly do transactions privately where you're not necessarily exposing your address. I don't know if ZK proofs exactly do this, but I think the Bankless boys are going to probably do like a deep dive on probably the technology and where it might develop and what might be the secure, like the privacy implications from that. So that'll be interesting to dive into.
That's a good point. Like, so the next logical step is, okay, we banned Tornado Cash. Are we going to ban like there are privacy focused layer 1s and layer 2s, right? That are entirely like secret.
Zcash.
And Aztec is
Aztec.
entirely like, is that whole thing just nuked? Like any wallet that ever touches that bridges there is just gone. It's just so easy to do that with the nature of the blockchain as it is. Like I just wonder what the ripple effects.
My optimistic self is hoping that like them going through this process is them going through the learning process of like, oh well, we said we sanction these, but that actually doesn't accomplish what we want, and this is why, and they learn why. And they keep going through this method, and they make mistakes look silly, but it's a way for the institution to like build knowledge and learn. That's what I would like to hope.
My realistic self is that Nick Urbani himself sees opportunity and spins up a offshore bank to be able to like exchange cheap crypto.
Yeah, that would be nice, but I like to stay in the good graces of the flag I live under. Thought about it.
Smithers?
The hat used to be a little gray.
I'm curious if you guys are making any moves on the basis of this. I think I told you guys I was going to talk about it in the Alfalfa Round, and I figured it's probably better for here. But I think I mentioned that I was going to sell all my USDC because I just don't see the benefit of holding this thing where it can just, I don't know, just touch the wrong.
You had a pretty aggressive tweet there the other day. Would you like to? I think that's important.
Yeah, what was
context.
the tweet?
It's just a copy pasta of SBF.
Okay,
not my words.
Okay, what was the tweet?
Just farming engagement. I said
sell your USDC.
Sell your USDC right now at $1, then tell Circle to go fuck off.
Yeah.
So what would you rather hold? What dollar stablecoin would you rather hold than USDC?
Okay, so my favorite one is LUSD from Liquidity.
Is that over collateralized by ETH?
Yeah.
Okay.
I think Liquidity. I don't know how to pronounce it. Liquidity is a really interesting project. I mean, I farmed it way back in the day when it had immense like rewards, and obviously the coin dumped very, very, very badly as a result of that. But the protocol itself is good. A lot of OGs like it. It's very. The founders are docs. The tokenomics of it are pretty good. I still think it's
original maker. Like when it's over collateralized 100% by ETH only.
Yeah, and it's got this kind of stability pool mechanism that's kind of interesting. Like you can farm at 9.5%, and also it serves as a way to buy cheap ETH. Like if people get liquidated, I know Tetranode was posting that he bought a bunch of ETH at like $880 via the liquidity pool, like liquidations with his cash, which is kind of interesting. So I think that's an interesting project, and I'm looking to put money there. Reflexor. Have you guys heard of Reflexor? Rye.
I've heard of Rye.
I've heard of Rye.
It's a good project that's kind of complicated, and I think people can't wrap their head around it. It's not pegged to $1, so it's confusing. Like they didn't want to do it to $1 because then people would think it was depegging. There's a whole bunch of stuff. People can check that out. But I think that's a really interesting long-term project. I also think SUSD, synthetics USD is interesting, and there's some good farming opportunities for it.
Good rewards on
it. Just or even if you don't like mint it with synthetics, there's still just good farming opportunity. Like Lyra Finance has a really good vault with it.
I used to use Lyra to do my options stuff, and you would use SUSD for all of that.
I mean, so you haven't mentioned DAI, but I assume because DAI is backed over 60% by
same thing with
USD.
Frax. I love the projects, and I don't think there'll be a problem there. But like if I'm going through jumping through the hoops to kind of sell this, it's like DAI is like kind of like wrapped USD.
Well, how much is DAI backed by ETH versus USD.
It's over 60%.
A lot.
USD.
Yeah.
USDC. Wow.
USDC. Sorry, I keep saying that.
It's a big number. And I would honestly probably put the rest of the cash that I can't farm or that I don't want too much exposure to. I would just put it in Tether at this point, to be honest.
That is the better of all problems. That's like the.
I feel like my money is way less likely to get frozen using Tether than USDC in this paradigm.
That's a
I just
big-
do.
It's a big
When you're
move.
talking about DAI, the situation you're talking about is, let's say, I don't know, makers contracts become part of this sanctioned list, right? And then all of a sudden, the collateral is not worth anything, and then DAI potentially
And
depicts.
in
That's what we're talking about.
would that even happen?
I don't know.
Like-
Maybe they come out with a central, bank digital currency, and they're like, we don't like your other ones that don't follow our rules or
everything.
RSF, so we don't like DAI. So
Yeah,
black.
CEO Circle is basically, he just tweeted, he's like, we are these are the regulations, we're under this license, the government said this, so we have to do it, and we did it. And that was the tweet.
Right.
It's like, okay, that makes sense, but do you want to be a part of that? I don't know. So yeah, I mean,
There's no like obvious answer. Is where I'm sort of landing here.
No.
There's no like right answer that's like this is the place to hold your cash if you want to be stablecoin. Like because Tether has its own risks and
yeah,
all these things have like smart contract risk and there's no like right one right now.
it's the trilemma, right? Like stable coins have their own trilemma. It's like there's scalability, there's centralization, and then there's
Security.
yeah. I mean, it's like you kind of pick 2 out of the 3 and you go with it. And I think it's a rough time to be in stables.
I think
right
if
now, but
LUSD, like just over collateralized by ETH, grew in market cap, grew in size, grew in liquidity, that would be interesting. That would be.
yeah, I mean, I suspect they'll just suffer from the scaling issue. I mean, even but before Tornado, I was looking into LUSD and it was trading at like $1.02. It's just like, this is like a problem. I think when your coin can't really scale to this, why Maker accepts USDCs is collateral, because there's just not enough ETH to collateralize to issue the coins.
Right.
And,
There's not enough dollar
Yeah.
value in ETH.
and
If ETH went to 15K, then DAI could go easily. It could be like, oh,
yeah,
take
that's a good point.
That's because there's a lot of more money in the system.
right.
Yeah.
yeah.
So if someone cared about privacy, what's the paths going forward?
I don't like privacy, like complete anonymity. Like the best you could hope for, I think, is to do an in-person cash deal with somebody and have them send ETH to a completely
What if it's
fresh
just
address,
personal privacy though, like privacy around?
I mean, I
All
think
your-
you just
You've never needed
send them from centralized
you've never needed
exchanges
Tornado
to
from that. You've always been able to just send it to an exchange and then send it from the exchange somewhere else and just kind of.
like your Coinbase Wallace address, when you receive, rotates.
they
So
cycle. Yeah.
I think that's just the simplest answer for now. Like obviously if they get subpoenaed, they're going to hand over that information. So as long as you're not, doing it for a legal mitigation, then it's probably fine. Just keep things semi-private.
Dope.
Cool.
Anything else on this?
No.
Yeah.
What are we talking about in the next episode?
What are we talking about?
Uh, it's
Testicles.
Say it.
Toxic masculinity is that what I have
We're
down?
not talking about toxic.
Oh,
masculinity.
here's a
We're
different
talking
title
about
for it.
no.
What's the title?
We're talking about the fall of masculinity.
The fall of
Oh, you don't
masculine.
like the toxic.
That's a different thing.
Okay.
You could say it's related in a way, but it's not the thesis.
I agree with that.
I don't want to do a whole toxic masculinity. I
Okay.
don't know what that voice was.
All right.
Just
Until next time,
Giorgio, cut that out.
It's toxic masculinity. We'll see you there.
Later, guys.
Much
Bye,
love,
guys.
Peace.